Ever since El Salvador announced it had started stacking BTC back in 2021, everyone has been wondering which government will be the next to take the orange pill. Well, what if I told you that central banks around the world could soon begin accumulating BTC, and that some of them may secretly be doing so already?
That we're already doing it.
Today, we're going to examine the possibility that central banks could buy BTC, when they could do it, and what impact it could have on the market and your portfolio. Let's begin with the relationship between cryptocurrency and central banks. Now, central banks first started paying real attention to the crypto industry after Facebook unveiled its so-called crypto project, Libra, or Diem, or Zuckbucks, or whatever, back in 2022. You see, where crypto was created in response to the 2008 financial crisis, central bank digital currencies, or CBDCs, were created in response to, yep, you guessed it, cryptocurrency. Basically, the Bank for International Settlements, or BIS, saw the potential that crypto has to disrupt the financial system, pooped its pants a little bit, and started working on CBDCs alongside central banks themselves. However, just 3 months before Libra was unveiled, BIS chief Augustin Carstens had stated that, quote, "So far, experiments have not shown that new technologies would work any better than existing ones. There is no clear demand for CBDCs on the part of society." Seems they took quite the U-turn then. I wonder why. Anyway, it's important to understand that crypto and CBDCs are, in most cases, unrelated. However, there are a few crypto projects who seem to be siding with the enemy by providing central banks with fully fledged blockchains to build their CBDCs on. Not going to name names. Now, this is important for reasons we'll come back to later, but for now, if you want to learn more about CBDCs, then you can check out our video below. Seriously dystopian stuff. Anywho, the thing is, more than 90% of central banks around the world are actively working on a CBDC in some capacity. And, according to cbdctracker.org, there are already 4 CBDCs live today. And this is just the start of it. According to that same website, there are another 155 CBDCs in various stages of development at the time of shooting this video. Yikes. Now, the silver lining is that this means central banks are paying attention to crypto, or at the very least, the technology it's built on. However, having crypto tech on their radar also means they could very well be keeping an eye on cryptocurrencies as well, particularly BTC. As it happens, this is something that's been discussed by central banks around the world, with varying opinions. For example, the European Central Bank, or ECB, hates Bitcoin and has even gone as far as to say that, quote, "The latest approval of an ETF doesn't change the fact that Bitcoin is not suitable as a means of payment or as an investment." Ouch. Still, I suppose we're all entitled to our own opinions, even if they are completely stupid. Conversely, the Swiss National Bank's chairman, Thomas Jordan, has discussed its openness to holding BTC if it believes it can fulfill the role of a reserve currency. Give him time, folks. He'll get there soon enough. Now, this ties into the reasons why a central bank might be interested in holding BTC. The first reason why central banks are likely to start stacking sats is as a hedge against inflation. For reference, a central bank is tasked with encouraging economic growth while keeping inflation under control. This is done by raising and lowering interest rates. Lower rates equals cheaper borrowing, more spending, and less saving, while higher rates equals the opposite, more expensive borrowing, less spending power, and more people saving their cash. Now, inflation can be quite a difficult thing to control because, as easy as it is to print fiat money, it's much harder to remove that money from circulation. In fact, it's one of the reasons why CBDCs were created, as they can be programmed to remove chunks at a time, similar to a burn mechanism you find with many cryptocurrencies. This can create deflation at a monetary level. This ties into the second reason why central banks could start holding BTC, and that is as a hedge against their own CBDC bets. That's because as time goes on, people are becoming increasingly aware of how dark the future would be if everyone's money was controlled by one giant financial institution. This means more people are turning their attention to alternatives to the current financial system, and as it so happens, Bitcoin is its biggest competitor. If central banks don't want to be left behind, they'll want to be holding some BTC as a safety precaution. Now, this might sound crazy, but it's almost exactly what Fidelity, one of the world's largest asset managers, predicted will happen way back in 2022. In their own words, quote, "We think there is very high-stakes game theory at play here, whereby if Bitcoin adoption increases, the countries that secure some Bitcoin today will be better off comparatively than their peers." Meanwhile, another reason why central banks could start holding BTC in their reserves is as an alternative to gold. Holding BTC would present these institutions with a few benefits. BTC has a lower inflation rate than gold, is much more portable, is easy to transact with, and has minimal storage costs, especially when compared to gold storage. This is part of the reason why BTC is considered to be digital gold by many investors. Now, central banks holding BTC as a digital gold reserve would help strengthen their fiat currencies, which in most cases aren't currently backed by anything. For reference, the US dollar was actually backed by gold until 1971, when the gold standard collapsed. The US dollar has been devaluing ever since. Now, the final reason why a central bank could hold BTC is, ironically, because of its decentralized nature. That's because Bitcoin cannot be controlled and therefore cannot be confiscated. This is exactly why some countries have started using it for international trade. For example, in August 2022, Iran's Industry, Mines and Trades Ministry approved the use of crypto for international trade amid sanctions, before using it as a payment method to import $10 million worth of vehicles. To be fair, we don't know what crypto they're using, but it's most likely BTC. And in April 2023, Russia announced plans to start mining BTC for cross-border trades, again due to sanctions. Crypto payments within Russia are still banned though, definitely not double standards at all. So, this all begs the question of what needs to happen before central banks start using Bitcoin. Well, first, commercial banks need to be allowed to hold crypto, or rather, have some standards around holding crypto. This makes sense when you consider the fact that central banks are technically owned by the largest commercial banks in most countries, including in the USA. As it so happens, the BIS is expected to introduce standards for banks who want to hold crypto on their balance sheets at the start of next year. These standards will give the commercial banks the ability to hold up to 2% of their reserves in crypto from the 1st of January 2025. And if you think that 2% isn't much, well, consider that JP Morgan and Bank of America alone have almost $7 trillion in assets under management. A bit of quick maths tells you that 2% of this is $140 billion. And I'll remind you, that's just two of the many mega banks out there. However, before central banks can follow suit and embrace crypto with open arms, the crypto market needs to be deep and liquid enough to handle large transactions without affecting prices. This is becoming more likely by the day thanks to the inflows coming into those spot Bitcoin ETFs in the US. I know you're probably as sick of hearing about them as we are of talking about them, but they're here to stay, folks, and there's no getting away from it. Anyway, in all seriousness, there's something else besides liquidity that central banks need in order to start buying crypto, and that's privacy, so that any buys, sells, or transfers can't be traced. Ah, the irony. There also needs to be a better understanding of where their holdings can be kept. If central banks decide to custody their BTC in one centralized place, then that opens the doors to a whole world of security concerns. This is pretty ironic too, because centralization is literally what these institutions are designed for. Logically then, the safest way to store their crypto would be to admit that centralization doesn't work before spreading their BTC across multiple hardware wallets, and the cheapest way they can do that is by visiting the Coin Bureau deals page to get a discount on some of the best in the business. Anyway, shameless plugs aside, there's just one more thing that needs to happen before central banks can hold BTC. Like the rest of the crypto industry, banks need to see some regulatory clarity. They won't be throwing money towards crypto at all until it's deemed legally safe to do so, which is understandable. From their perspective, the risks severely outweigh the rewards. Now, with all that said, there are a few financial institutions that will likely never jump aboard the Bitcoin bandwagon, no matter what happens. For instance, there's the BIS, which will remind you hates crypto more than anyone. As they see it, quote, crypto is not stable enough to be money. And yet, something that would have cost you $1 100 years ago would cost you $18.34 today. So much for stability. Anyway, the International Monetary Fund, or IMF, is another institution that will likely never adopt crypto. In fact, they're so opposed to the idea that they actively suggest using CBDCs to fight the adoption of cryptocurrency. But here's the thing, it's highly likely that some central banks have already started accumulating BTC behind closed doors. If you're not convinced, then here's something to consider. If there is anyone who has a deep understanding of the markets, it's the institutions behind those markets. Also consider that the majority of crypto market analysts believe we'll see the current bull market peak at some point in 2025. Now, ask yourself, do you really think central banks will wait until peak bull market mania to start accumulating? Now, at this point, you're probably wondering what effects this could have on BTC and the broader crypto market. Well, we'll start with the obvious answer and say that yes, number go up. This is hardly surprising considering the billions of dollars central banks will have to throw at it. Anyways, the less obvious effects would be that central banks could set a floor under BTC's price, much the same way they have for gold this cycle. It goes without saying that this assumes that they see BTC as a safe haven asset like gold, or at least a truly decentralized digital asset worth accumulating. For reference, the 20th of May this year saw the price of gold hit an all-time high of $2,450 per ounce. This is despite the rise in interest rates, which should have had a negative impact on gold. As some of you will know, central bank demand for gold has surged recently to 1,000 tons annually for the past 2 years, more than double the historical average. This is due to a combination of everything from inflation to fears of sanctions from the US and its allies. If central banks start to see BTC as a safe haven asset like gold, then they could also step in to scoop up some BTC as soon as it falls below a certain level, which could set a sort of price floor. Consider that there's been speculation that central banks were buying gold at around the $1,700 level, hence why it held at that level when it dipped in recent times. And, speaking of gold, another effect central banks buying BTC could have on the market would be an influx of new investors. As we mentioned earlier, BTC has been outperforming gold for a while, and if central banks begin holding BTC, investors who stick to more traditional assets, like gold, would be likely to rotate some of their positions towards BTC too. And by the way, if you want to learn more about how BTC and gold compare, you can check out our video that will tell you everything you need to know. The link to that is in the description. Anyways, as for the crypto natives, just the news of central banks buying BTC would be bullish AF, at least in the long term. However, it's likely that in the short term, this would signal the crypto bull market top. I mean, it's hard to think of an even more bullish catalyst that could follow. When that news gets out, even your grandma will be asking you about that Bitcoin thing. And when that happens, sell everything and run for the hills. No, jokes aside, not everyone will be so thrilled about the news. In fact, some Bitcoin OGs and maxis could see this as such a negative that they dump some or all of their BTC. This would kind of make sense because central banks are exactly what Bitcoin was created to replace. BTC becoming just another tool for TradFi could be seen as admitting that the game's already over. Now, this ties in to the potential downside risks Bitcoin could see if central banks were to start holding BTC. The first risk is that number go down just as fast as number go up. The massive amounts of money that will be flowing into Bitcoin is obviously great, but if that same money were ever to flow back out again, then plenty of people would get wrecked. This is especially true if it creates additional panic selling. Another risk, meanwhile, is something going wrong with Bitcoin or indeed the wider crypto industry. If central banks have any bad experiences with crypto, like another FTX for instance, then this would likely result in stricter regulations coming into force. Now, while the industry does need regulating, you can bet your bottom digital dollar that these regulations would be unfavorable. They'd also be plastered all over mainstream media, giving crypto a bad reputation, which could turn central banks off the idea of ever holding crypto. And let's be honest, the last few years haven't exactly seen crypto in the best light. Thanks, Sam. Don't drop the soap, will you? Anyway, another risk is that BTC could become even more volatile than it is already. That's because banks could print enough money to buy up much of the BTC, effectively removing it from circulation. Now, the risk here is twofold. First, the remaining liquid supply is more sensitive to any buying or selling activity, which will make BTC's price less stable. And second, if the bank then decides to dump a whole load of BTC back onto the market, then this could deal out a devastating dip. But even if the banks don't start buying BTC, they'll likely leverage crypto in one way or another. The obvious standout here is stablecoins, which financial institutions could leverage in conjunction with CBDCs. Heck, if CBDCs fail, then centralized stablecoins could even become the go-to alternative. So this brings us to the question of what other cryptocurrencies besides BTC could be considered by central banks once they take the orange pill. Well, by far the most obvious choice here is Pepe. It's got some great tech, some solid fundamentals, and no, relax, I'm just kidding. In all seriousness, if a central bank was going to extend into other cryptos, then a likely option would be those that have similarities to BTC. So think perhaps Litecoin or Bitcoin Cash, for example. There could also be consideration for the teacher's pets out there. By that, I mean the projects that have been actively working alongside central banks to develop their CBDCs. For instance, XRP could be considered thanks to Ripple, who have provided a CBDC platform on a separate private ledger designed specifically for governments, central banks, and financial institutions. Another could be Stellar's XLM, thanks to Stellar's support with creating CBDCs on its public blockchain, albeit with custom parameters that give these centralized entities more control over its governance. Alternatively, rather than holding physical gold in their reserves, banks may opt for using tokenized gold, such as Paxos's PaxG or Tether's XAUT. This would provide similar benefits to what we mentioned earlier with BTC. It's more portable, easier to transact with, and has much lower storage costs than the real thing, which is kept in Brink's vaults in London. So long as London remains a neutral financial hub, this could present a viable alternative. However, the most likely option of them all would of course be Ethereum's ETH, for a number of reasons. First and foremost, it's BTC's closest rival by market cap, having sat comfortably in second place for most of its existence. And with spot Ethereum ETFs now approved in the US, banks are even more likely to consider ETH. At the time of shooting, these ETFs have been approved but haven't yet been listed. Let's hope they don't stumble at the finish line because of something like, Consensus getting sued by the SEC. And speaking of which, another reason why Ethereum could be considered is because of Consensus. In case you didn't know, Consensus is behind the MetaMask wallet and Infura, a node provider that powers MetaMask and many others. Besides providing infrastructure for Ethereum, Consensus has also been helping to bridge central banks with TradFi institutions by building services on top of CBDC networks, all in a partnership with fintech giant Visa. Naturally, this is another green tick next to Ethereum's name. However, this could be bad for Ethereum in the long run. That's because central banks could, in theory, print enough money to buy up enough ETH to pay for a boatload of validators, giving them power over the network and making Ethereum more centralized. Let's hope it never comes to that. Regardless, the banks would need to hold on to some ETH in order to pay for any network fees. And just the news of central banks holding ETH, no matter how small the amount, would get those moon boys well and truly fired up. But, well, let's not get ahead of ourselves. Once central banks have bought BTC, then we can talk about altcoins. And who knows which ones will be around at that point in time. Okay, that's just about it for today's video, folks. So if you enjoyed it, go ape on that like button. Subscribe to the channel and ping that notification bell so you don't miss our next one. If you think others could benefit from this content, then take a second to share this video with them. And if this video has inspired you to buy BTC, whether you're a central bank or not, then be sure to use the Coin Bureau deals page. It's got trading fee discounts of up to 60%, sign-up bonuses of up to $60,000 on some of the best crypto exchanges, and discounts on some of the best hardware wallets too. The link to that is below. Thank you all so much for watching, and we will see you in the next one. Until then, this is Guy, signing off.